Why is
Yeah.
it overrated? You know what I mean?
You're going to open one as one way contributions here.
1/100. XN is some kind of fundamental calculus.
Welcome to the It's More Than Just Money channel. I'm your host, Witness Mtaka. I'm sitting here with Miguel Martins, and he's here with me to dive into the conversations that we usually have with change makers, entrepreneurs, and business people that join us on our channel and basically converse with us in order to add value to you, the viewer. Now, if you haven't subscribed, please click on that subscribe button, click on the notifications bell, comment as you are listening to this conversation. Let us know where you are watching from. Let us know which part of this conversation resonates with you. We're going to talk a lot about property investing, more particularly on the financing side of things. Miguel Martin worked for APSA for 25 years. He owns over 8 properties with a value of over 20 million. He's done a lot in the property space. If you know something that's called future rental value, he created that for APSA, and he's created a lot of opportunities for property investors to be able to get into the property market. Mr. Martins,
Witness.
welcome to the Winner's Circle on It's More
you.
Than Just Money. Thank you for joining me. And I can never appreciate you enough for your friendship and your commitment to other people. You know, your commitment for wanting to add value. Every I've seen where there's an event where there are property investors, you always avail yourself to add value. Why is that?
Sure, I enjoy it. I think I enjoy sharing. I enjoy taking what I know and imparting it. I'm not necessarily a massive expert in anything, but I know a lot. But more so, I enjoy the feedback, the questions, the discussions, because I learn from them. There are very few times when I've gone to and been in a space with people where I was, where I was the cleverest in the room, because I got clever questions that made me think. I have a view. I have enough experience and knowledge to provide a view on most things, but sometimes the way a question is asked gives me a different perspective. And I think about that. I think about how that applies to me in my business, in my portfolio, in my strategies, and then take it from there. So I go into rooms, I give them myself, but actually to get the value back as well.
Tell me more about your background and your upbringing. What was that like?
Sure. Born in Hillbrow in Johannesburg. My parents are both Portuguese from Mozambique.
Hey, fartel português.
Falo português. So grew up in Johannesburg.
Did they have shops?
No, they didn't have shops. My dad was a financial advisor.
Yeah.
My mom worked at the bank for a while as a branch teller. So it's a very kind of normal type of family. We didn't have shops. I'm now married to a beautiful Portuguese woman as well, who now in her family now it's shops and farms and that kind of thing. So and all the rest. So I've now brought that into my family.
Yeah. So now you are a proper Portuguese.
Yes, definitely. I'm proper Portuguese.
Continue. Yeah.
Just so it's myself and my brother and my sister, and we grew up in Johannesburg. Nothing really to shout about. My father dabbled in a bit of property renovations, etc., on the side, so I had a bit of that exposure early on. But it was, and when I was studying, I developed or just created a courier business. I used to courier UNISA assignments for students. Before we had email and all those things, we used to have post boxes around Gauteng, and I had a driver and a car, and every day we would do probably about 160 kilometers just driving, picking up assignments and taking them through to UNISA in Pretoria. That was my first entrepreneurial type of business. I then started working at ABSA. I wasn't doing very well. So it was successful, but I wasn't making any money. So it wasn't successful.
So your first job was ABSA?
My first job was ABSA. I started ABSA as a graduate trainee, right at the bottom.
Jeez.
You go into ABSA. I think they still have them today. It's a 2 or 3 year program, and they put you around.
Where had you studied? Where had you studied at
I
the time?
studied at UNISA.
Oh, you did UNISA?
I did UNISA.
Oh, that's how you knew how to drop the assignments.
I understood the problem because I was the one, going in at kind of 11 p.m. at night into Joburg to the UNISA box, and I thought, geez, there's got to be a better way than doing this. And I knew other people who were doing the same. And I saw the problem, had an idea about the solution, went and pitched the idea to UNISA. I think I was 19 at the time. They said, go ahead, we can't help you, but we're not going to stop you. Go ahead.
Did you make money?
No, I didn't. I underpriced myself. I didn't realize the value of I didn't realize the value of what I was offering, and actually my ticket prices were too low. But the two people I had on board was UNISA and Engen Garages. Engen, we got an agreement with Engen at the time to actually put these post boxes because they were open 24 hours and they could sell these little postage stamps. And at 19, you're having these big conversations. It just tells you that actually, if I can do this, what else can I do? You start to work through some of those mental models or barriers that we tend to have. So I started off at ABSA, and I think at about that time I read Rich Dad Poor Dad. There were two books, Rich Dad Poor Dad, and Nedbank. I think it was Nedbank had a book out on financial management. The banks used to give out these books, but it was like a proper book. And there was a whole chapter on property finance, property investment. And that, together with Rich Dad Poor Dad, I started thinking, there's something in it. And I bought my first property in my second year of work.
Your first property, was that were you investing or?
I was investing. So I was renting, and I was renting for myself, and I bought this property to rent out, a little 1-bedroom property.
And you continued to rent where you were staying?
I continued to rent. Yeah. It was the apartment I rented in Melville was a lovely apartment. It was big and was for cheaper than what I'll be able to buy for.
Yeah.
So it actually made sense for me to rent at the time, and I also realized that people want to move into their own property. They want to be in their own space, and I realized actually a good space doesn't have to be my own space.
What's the philosophy around that? A good space doesn't have to be my own space. I believe the same, but I just want to hear what your philosophy around it is.
So I think it means different things at different times in your life. So at the time, of course, I was single. I was, young professional. I was mobile, so it didn't really mind. I needed to be in a space that I'd enjoy. It didn't have to be mine. Fast forward, probably 15 years later, I was married. We're talking about kids on the way, and then it was important for me to live in my own place. So I think it's largely an emotional decision.
It sounds emotional,
and it talks to you where you are in your life, in your life stage, and what your needs are.
Yeah, but if you were to do it again, knowing what you know about property investing now, because you said you worked 15 years, and on the 15th year you met your wife, and she said buy a home, right? Knowing what you know now, would you have still committed so much money to a primary home, or would you have continued with your strategy of I can provide you with the best place for you to live. We don't have to own it. Let's continue investing in property.
Sure. It's easy to do this in retrospect. I think if I was committed to my to building a property portfolio in the right way, we would probably still be renting today. Or I would have found some tax reason to or tax loophole to buy or something like that. I would have really applied that thinking. I mean, we bought a home. When we bought it, it was the worst home in a great suburb. So that's always the strategy. So at least we did that. But when you buy your own home, when you apply the financing but don't get any rental for it, pretty much reduce your affordability. And I guess what I didn't realize at the time is to what degree that would impact our affordability. And we didn't finance another investment for about 5 years after that, just whilst our income and cash flows and everything else rebalanced. So probably would have thought differently about it, but you make these decisions, you make them with the right intent. Don't regret it, but I do see that it impacted that portfolio growth trajectory.
So you sound like you've always been entrepreneurial, right? And for me, it begs the question, what made you stay at the bank for 25 years, given the fact that obviously you've always been entrepreneurial? You started your first business when you were 19. And with the work that you did while at the bank, you were investing in property, you're an investor, you're entrepreneurial. Even now, having left the bank, you're still entrepreneurial, you're doing property. What made you stay for so long?
Sure. So I guess at the bank, I had a variety of roles. Well, I had a variety of roles, and there were kind of roles where I was always building something. So, so the one role, I looked after sustainability for the Absa Group for a little bit. And it was right at the beginning when we were still figuring out what sustainability meant. Was it going green? Was it social? Was it economic? And it was right at the beginning, and we're kind of breaking ground, and that was exciting. That was super interesting. And then the next role after that was I looked after our mass market segment, and the brief was, so the mass market at the time was defined as anyone earning less than 3,000 Rand a month. What banking products do we offer someone like that? That's affordable, that's effective, etc. And so that was a real challenge. So I enjoyed the challenge of trying to solve find solutions for those challenges. I launched one of the first credit cards that the
student cards,
the retailers use. No. So if you're going to, and I haven't looked at this for a while, but if you're going to Pep stores, and you want to open up Pep have their own Visa card.
Yes.
I was involved in that right at the beginning. It's evolved a lot since then, but I was, that was all of a sudden banking at a Pep counter kind of thing. So these things seem small, but they're actually on the back end. They're super complex. And then my last role was in home loans, all the way along this, I had my corporate role, but I was also building the side hustle of a portfolio on this, of this property portfolio on the side. And
but did you go from sustainability to home loans, or there were other roles you played in between?
So it was sustainability. It was head of mass market segment. It was this retailer credit card, and then home loans. So those are my last probably 4 significant roles. But I was always building property on the side because I enjoyed that. I enjoyed the idea of property. I enjoyed the idea of owning bricks and mortar, owning houses.
Yep.
So I enjoyed the fact that I also wasn't beholden to my corporate job. If I wanted to push the envelope, I didn't have to worry about corporate politics, because if I looked around the room, I had a bigger balance sheet and larger, kind of rental income than most of the execs I sat in the room with.
Yeah.
Now, it didn't make me cocky, but it gave me confidence.
So that's interesting. You know why it's interesting? When I was in, I wouldn't say my first job, the only job I ever had, right? I worked there 14 months as a young guy, right? Promoted 4 times in that 14 months. Or some roles I created for myself, then they said, do it. It's a promotion nonetheless. But I had the confidence to do what I wanted to do without fear of being fired because I had rental income. So it didn't, if I would try out, I figure when I look back, I tried out things more because I wasn't scared of being fired. If I needed to argue back with my boss, I'd argue back for as long as I'm respectful. Right? Did you find that because you were investing in property and you had income, which now was even greater than your salary, you found that you were more confident in your decisions, in your job, and what you were doing?
Yes, so absolutely. I just had the, I wasn't locked into a single person, to a single job, and I didn't let the politics that you find in corporate, worry me too much. I chose jobs that were roles that were interesting as opposed to building a career. What was interesting is that because I think I did well at the roles that I had, because I enjoyed them and I put myself into them, it helped me advance myself.
You're not doing it for money?
No, you don't work in the retail bank for money. You want to go work in the commercial bank and in the investment banks. That's where the money is. In the retail bank, the salaries are good, but that isn't where the money is in banking. But I enjoyed the roles. I enjoyed the jobs I was doing. At one stage, I was doing a project where I was sitting in Stockfell groups in the Drakensberg, trying to understand how they manage money and how money flows there, so that we could look at whether we could develop a product for them. I mean, that's amazing. It was such a fantastic opportunity for someone like me who's never been part of the culture that sits behind Stockfells.
Yeah.
And all of a sudden, I was
Just
sitting
say you
on the
wanted black friends, man.
but so I look back on my corporate career, and we haven't even got to the home loans part yet, but I learned so much and was given so much exposure. I would not have the knowledge, the tools, the understanding today that I'm using, being an entrepreneur, self-employed, if it wasn't for everything that I got through those roles. So I really appreciate that. I value it, and I'm glad that time is over.
What sort of fulfillment were you looking for? And it seems even before you joined the bank, right, the courier business, there was a certain problem you were solving for others, but primarily it started with you. Mm-hmm. You were solving the problem for yourself, but it also sounds that there was a certain level of fulfillment you got out of what you were doing. And then in the banks, everything you're saying, I did it because I loved it. So there's some sort of, it sounds like you're chasing a certain level of fulfillment and you are getting it from the roles that you're playing. And as soon as it's not there anymore, you move on to the next thing.
Yes. I guess ultimately, I want to make sure that I'm adding value. I want to make sure that, in the way I determine what, in the way I think value, what value is defined as. I want to make sure that I'm making an impact, I'm changing things. So a role needs to do that. A job needs to do that. And even now, with being self-employed, there are so many opportunities that actually come past us, and one of the criteria as to whether I grab onto it is this going to make a difference? Is this going to add value? So I think that's incredibly important. Otherwise, I think I don't know. There are some people who take on roles and take on jobs and have careers where it's a job, and I'll have my life after work. You can't spend 8, 9, 10 hours a day and not invest a bit of yourself into that. So that was a decision I made early on, and it wasn't a hard decision because I had this other thing happening on the side. And even when the property portfolios weren't, a property portfolio doesn't make a lot of money in the beginning part. For the first 10 years, it doesn't really make a big difference. I was actually building more a balance sheet than I was cash flow at the time.
let me correct you. You must say the property portfolio I had at the time was not making money in the first 10 years.
Yes.
Because now we're going to give people the impression that they can't make money in the first year, which they can.
They absolutely can. So there was a massive flaw in my property education.
Yeah.
In that I focused because I was, a couple comments before, because I was earning a salary, I was happy to fund my property portfolio.
Yeah.
First mistake. You know, I have, and I had, even today it's self-corrected, but I have some assets in great locations, some properties in great locations in Sandton, which are just a little bit better than break even today. Because I bought the asset, didn't buy the cash flow. And I didn't realize at the time that by doing that, I'm actually moving backwards. So that was a bit of learning. But I was in corporate. I knew, you know, I've got this portfolio. Actually sitting there at my job in corporate, knowing that I had a property strategy that I was progressing on, gave me the confidence, even if I wasn't making cash flow at the time, or any significant cash flow, gave me the confidence to be a lot more confident around the table and choose and really go for the roles and jobs and projects that I wanted to, as opposed to what was necessarily just offered to me or I was told to do.
What was the tipping point when you moved from the strategy that you were doing then to now the cash flow strategy? Now it sounds like with the one that you were doing, it was more on capital gains and capital accumulation as well as asset accumulation. Whether or not you had cash flow, that didn't really matter. But at what point did you say, now we're moving into making money from this portfolio?
It was about 6 years ago, very recently.
Only 6 years ago?
That I was repositioned. I wasn't retrenched.
Yeah.
I was repositioned.
Reshuffling.
Reshuffled. And, you know, this happens. And so a couple of things. You realize that those decisions are made by people who don't even know you, don't know your role. And it wasn't just me, it was broad. And you realize that in a corporate machine, you are really just a cog. Okay. And I was happy to be there to do that, you know, and provide value, you know, with the thought, and maybe I was a bit naive, with the expectation that people would appreciate the value and reciprocate. What I realized was, you know, and this had happened all around me, and it was the first time it happened to me. I'd seen these shuffles and retrenchments and restructures and all the rest. I'd seen them for years, but it never happened to me. Until it happened to me, and no one could substantiate why and why not and all the rest. And I immediately thought, to hell with this. Let me look at plan B. And I looked at my portfolio. I'm like, oh, hang on a second. This is not doing what it's supposed to do, really. I was in a bit of a fantasy land. And immediately then, I adjusted my strategy. I adjusted even the areas which I invest in. Still in Johannesburg, but I literally just went over to two suburbs over, and I started investing for cash flow almost immediately. And I looked at the existing properties and I said, how can I squeeze out more cash flow by adding another structure onto the property or another apartment or just doing things differently. I immediately started focusing on cash flow, but I needed that wake up call. And I find in life we know these things, we see these things happen around us, but until they happen to us, you don't. That's when you get a wake up call.
What creates that oblivion where, these things are happening around us, but it's like we're not catching the smoke. It's happening, but you're like nonchalant about it. Does something really have to happen to us first before we catch the wake-up call?
I think because sometimes, if you start acting out, if you start acting as if it's going to happen to you, you worry that you're going to invite the thing to happen to you. Maybe there's a bit of that. but I also think that, I mean,
Positive thinking.
when I had to readjust my strategy, it required work. I couldn't just carry on doing I had to adjust the model. I couldn't just carry on. I had to rethink the model. I had to rethink my strategy. I had to rethink, how I was renovating properties, how I was positioning. I had to do work. And sometimes when we think we're on a strategy, we're on a plan, just keep on doing the plan. You actually don't want to consider an alternative plan because to shift requires work. And that wake up call, as much as it confused and it hurt me emotionally that what had happened at the office. I didn't lose my job. I didn't lose my income. Everything on the face of it, I was a lot better off than many other people who had been affected and eventually left. So I was actually fine, but I was shocked at how I'd added so much value to my employer, and it wasn't really considered in the same way, or maybe it was, but it wasn't. My expectations weren't aligned with the experience. So I'm thankful for that because it took me to where I am now. So there are in everything that affects us. And someone once told me, "Where's the lesson? Where's the silver lining? Where's the benefit?" And when these things hit you, and just once you gain a bit of composure, it's like, what's the lesson? What's the positive thing that's going to come out of this? And it's a hard question, and the answer is usually not easily available, but eventually it comes.
So what I like about you, perhaps maybe I can tell you today, right? Though you seem like a shy person, you're one of the most networked people I know, and you network with everybody. What are the lessons that you can share about the power of networking? I mean, I see everyone around you, obviously, right?
Yeah.
You've got blacks, you've got whites, you've got Indians, you've got everyone. Why do you want to be friends with everyone? Not saying it's a bad thing.
I'm going for president.
What's that all about? And what's the power in it?
Sure.
Did you realize that, or are you only realizing now?
It's interesting. I know it, but I don't do it. I don't have the same intentionality as a networker. So I don't go out with it with intent or with an agenda. I'm not a salesperson. If you know what I mean. I'm friendly. I never say no to people. I always happy to have a chat. I feel like I've got something to share, and people come to me and we have that conversation. I've also always made myself available to help. When it was with financing and people were putting an application or trying to understand, made myself available to help them, to help them through the process in the right way. And I did that because the benefit I get is that if I make myself available, if I'm of service, I learn from that person. I learn from the situation. So unfortunately, I guess, I haven't necessarily managed to, necessarily monetize it or commercialize it, or, I mean, I've been able to pull on my network when I need to, but I haven't done it with that level of intent. So I guess it's also been fairly authentic. I didn't set out to do that, but it's such a privilege and a pleasure to be with other people, see the paths they're on, the challenges that they come across, and how they and how they manage them. And if I can get 10% of insights of what that looks like, I might reflect on it myself. So always learning from each other, and then always, you look around and you see Witness is doing the big deals, and I'm thinking, geez, what's Witness got that I haven't? Don't answer that. And and I think, well, look, in Miguel, level up. Either level up in being disciplined, do what you need to do, or have the bigger conversations, or rethink my mindset. So that's what comes out of that.
And then tell me something. At what point then do you transition to Airbnb hosting and building a portfolio around Airbnb? You didn't touch on that today, but perhaps you can touch on it now. So
Sure.
the Airbnb strategy after you left your job, and I'm sure it's making way more than the portfolio did when you started.
Sure. So I left work. We were all working from home. And
COVID 2020.
Well, so it was 2022, and basically the business I was in at Epson home loans didn't go back to the office for the most part. At least these the teams I was involved in. Everyone kept working from home.
What was your book at the time? Total value
that I was looking after, it was about 70 billion.
70 billion rand.
Yeah.
Wow.
So looking after that, and it's a massive book, and it's but I never really thought of it from that. What I miss is customers phoning me, and I got to know some of the customers, and saying, I bought this. Do you think it will? I'm looking at this. Will it get financed? Don't think will it get financed? And yes, they'd phone me for the finance conversation. But we'd very quickly have an investment conversation, investment strategy conversation,
right.
And then I would try and bridge the two. Because today, and I think that's something that's missing in the banks and just generally in business, is that people don't, they solve the obvious problem. But if you just ask, if you understand, as an investor, I understood property investment. And as soon as I started having a conversation with the client on their property investments in a way that enables them to finance, we would connect. We would absolutely lock on. We would keep that client. And I always told my clients, if Absa doesn't sort you out, go to other banks.
Well, what's the easiest way to get financed?
The easiest.
You don't work there anymore. You can tell us now. What are the secrets?
There's no, everyone thinks there's this black box of smoke and mirrors that no one quite understands. It's as simple as, have you got the affordability? Have you got a good good credit record? And is the property worth it? That's it. Unfortunately, it comes down to that.
There are properties that are not worth it.
Then the bank won't finance it.
No, I'm saying there are. The ones that are not worth it, what are they? What are the properties that are not worth it?
No, so this is where you buy a property for 2 million, but the average value in the area is 1.5. The bank won't. The bank will come back to you and say they'll offer you a 1.5 million rand loan. You got to put in 500,000 rand deposit. So it's ensuring that the asset can stand for the loan, because ultimately, this is the reason that if you default. And the bank comes and takes your asset away, your property away.
Yeah.
They want to be able to sell the property to pay the loan off.
What's the highest you financed?
The highest we financed?
Yeah, the deal that you saw, that you were overseeing maybe.
Not very high, 4 or 5 million. Well, no.
Average hole.
Sorry. We did a portfolio of about 250 million, but it was a developer's portfolio,
right?
And it had quite a few properties in it. Probably had about 100, whatever the number was. There were quite a few properties in it. So it's home loans. Home loans is a sausage factory. They just do sausages. Don't ask them to do other types of sausages or pancakes or whatever. So if you understand how to.
I remember talking to you when they didn't want to finance my property there because they said I've got too many units in one of the properties. Remember that?
Yes, concentration risk. Yeah, look at it. So I think as long as you understand the basic rules, it's all the same. I watched a program with Ronaldo, the soccer player.
Yeah.
And he said he thinks he's a great soccer player because he understands how to work the rules.
Right.
Once you understand
100%,
that,
yeah, 100%.
work it. Then you work around it. Many people actually don't want to learn the rules, don't feel the rules are right. It's not your rules, it's someone else's rules.
How does the universal loan work?
The universal loan.
Yeah.
Sure. I haven't heard that for a long time. A universal loan, that's effectively when you have one loan. So a home loan.
So let's say you've got
one
5 home loans now.
So a home loan is one loan, one property.
Yes.
Okay. Universal can be one, now they call it a facility loan
Now they call it a facility.
with 5 properties or more.
Yes.
You know?
And what's the qualification criteria to be approved for a universal loan? I'm plugging these
Credit
guys.
score, affordability,
Yeah.
and value.
Credit score, affordability, and value. And then do they wait for you to accumulate the number of properties first? Or can you outright find 5 properties as long as you've got affordability and say I'm doing a universal loan for all 5
Yes.
simultaneously?
Yes.
There's always been an argument online, People will say Witness is lying about being able to finance multiple properties at the same time. And I realized how much people don't know about what's available out there. And I'm glad I'm sitting with you because now I'm able to ask
Yeah.
that when it comes to, because I know obviously you can finance 2 simultaneously if you've got affordability. They don't have to have a universal loan.
Yeah.
They can have 2 different home loans. But say, for instance, you've identified 5 in 5 different areas. And you're like, I don't want to have the hassle of registering too many bonds, for example. Obviously you will. But the hassle of paying 5 I want to have 1 bond
Yeah.
and I want to buy all of them at the same time.
Then, apps that have the universal loan, RMB, Investec.
Absa must pay me. I'm plugging them.
Now it's a private banks because you're kind of in that space there, right?
Yes.
They all have what they call a structured lending facility. That's effectively what it is. That's the name they give it. So a lot of the banks offer that. They offer it in different ways. Absa's one is a lot more flexible than.
Hey, you're still loyal, eh? You're still loyal.
I used to look after that, so I didn't develop it, but I definitely improved it.
You worked in that team.
I used to look after. So I looked after buy to let. I looked after international mortgages, private banking, finance.
How did you come up with future rental income facility?
I was having a conversation. I was frustrated because I couldn't finance a property that I wanted to finance because my affordability wasn't there. It's probably the time when I just bought my property. and I was
Let's correct it. It's probably the time you bought your wife a property.
Exactly right. And I didn't have my own affordability. And I was speaking to someone who had properties in the UK, in London. And
Andrew?
It was someone else.
Okay.
And he was talking. He was going on about that you can buy a property, you can finance a property with the rental that they're going to earn on their property, so future rental income. And I came back to the office and I went to our credit committee. I said, "Why can't we do this?" No, we can't. I'm sitting on National Credit Act. I said, "Let's go understand this." Now, remember earlier on I was talking to you about how I look at problems. I look at problems from this perspective, and then I turn it upside down, and I try to ask questions.
Oh, the cutting of the orange.
Yeah, the orange. If you cut it one way, it looks like this. You cut it the other way, it looks the same orange, different cuts, right?
Yeah.
And I just applied my mind. I looked at it, and then I saw that. So the National Credit Act requires that the property can be paid, that you can afford the property. It doesn't say you can afford the property today. Your affordability is today. It just says that you can afford it. That I forget what the wording is quite some time back, but that the affordability is certain. I said, but if we know that in the area a 1-bedroom apartment, gets 7,000 a month, how certain do we need to be to apply it? And so I just started asking the questions, and I also took the approach of, don't take the easy answer, push it. Sometimes push the questions until until you really irritate someone, they tell you to bugger off, or until you are able to find a solution or find an alternative solution or a variation of it. And that's how we got to it. But I still remember being I was at a SAPIN event, and up front, a South African Property Investors Network event. And I was talking about future rental income. And in the crowd, in the front row, someone says to me, "It's illegal."
Future rental income.
It's illegal. You can't do it. It was a guy from Standard Bank.
Your competitor.
And he's literally like, I mean, by the time ABSA does something, believe me, they've scrutinized the heck out of it.
And everybody's playing catch up.
And I remember this was another bank.
Your blood is red.
and there was another bank. And I think, what told me at the time is that it really validated that, we'd been seriously innovative. I mean, I might have had an idea, but I mean, it was a team that pulled this together. But we really were pushing the boundaries. When people start telling you that you're wrong, and they're almost like emotional about it, it's either because you've gone beyond where other people think is possible,
Right.
and that's what this guy was telling me, is that it's impossible. Now, I did not go sit down and tell him exactly how he did it, because he's the competitor, and I wanted him to keep on thinking that it was wrong, and he probably spent the next year trying to figure it out. There is a bank that's come out with it now. It's Nedbank has actually come out with it in the last 2 or 3 months. Future rental income.
Only in the last 2 or 3 months.
and this is the amazing thing. And again, I'm out of the system for a while now. It wasn't used a lot. Because what they found, I think when people applied, they used it. But actually, when it went through the credit process, the credits realized that they didn't need to use it. And actually very, 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 very few loans actually use future rental income. But the lesson is this: because we were innovative about that product and that offering, we were considered to be kind of leading the markets in innovation, even though it was very few people using it. As well as people did apply with it, and they thought they needed it. But at the end of the day, they didn't need it.
Because they had the affordability.
And the question is, would they really have applied
If they really need
if they didn't have this thing, if they didn't have future rental income so having it there gave me the confidence to try. But actually, I didn't even need it. I never needed it anyway. But so and the lesson I take from that, I think, is as we think about ourselves and our lives, and as entrepreneurs, a small innovation, if it's the only one in the market or amongst your competitors, sets you apart, pushes you out there, and it gives you benefits in ways you don't even realize. And also the mindset of sometimes we need certain things, we think we need them to even try. But actually, when we try, we realize we didn't actually need them.
And in terms of risk for yourself, even when you left your job, that was a risk that you took, especially if you're leaving your job to actually do Airbnb. Airbnb was not buy to let, which you had been doing for years. It was a totally different thing. What informed that? And why weren't you deterred by that?
Sure. Leaving your job where you get paid, you're paid a good salary once a month on that date.
Tell them you are getting paid a lot of money, man.
And well, the thing is, so I have this theory about how you structure yourself financially. You've got to be careful, because you're taking a home loan. You are going to be paying that amount of money for the next 20 years.
Sure.
You get a car loan, you join the gym, you do all these different things. Now, you almost get locked in to an income. You structure that lock-in to an income. You can't just sell your house. Yes, you can, but it's costly. It has massive impacts, etc. So we all have financial structures. If we are clever about it, we keep our costs low, and therefore the income we actually need is relatively low as well. There's no ceiling to income, really. But how far do you have to go before you are above water, right?
Yeah.
So that I think about that fairly often. But your question was about risk. So I've got a coach. I've been working with my coach, and it's a property coach, but always comes back to mindset.
So he's your life coach as well.
So it's coaching is coaching. It's life coach. Whether we speak about, and we've been out together for about 3 years now.
Yeah.
Whether we're talking about,
We don't mean it in that way. Been together for 3 years now. That's correct.
not anymore.
We mean we've known each other for 3 years.
But an effective coach gets you to reflect what you are saying,
Yeah.
and says it back and also steers and guides you to be more open to ideas.
Sure.
And in conversations with him, it's like, enough of this. I need to now make the move, but I can't. And he says, why can't you? Okay, let's list this.
Where's the problem?
Okay, let's start at number one. How do we solve for that? How do we solve for that? How do we solve for that? And I was amazed at how we found solutions pretty quick. I was like, hang on a second, actually, maybe I can. And I so mapped out a roadmap as to how to exit a salary, exit corporate, and what it would look like after that. The roadmap was there. Of course, without the support of my wife, if you got people around you, they got to be supporting you. And without that, it's going to be very difficult.
So you married right.
I married right. I did marry right.
Yeah.
She might say every so often that.
Is marrying right part of financial strategy?
Absolutely.
Yeah.
Marrying, love's important. Love's important, but you've got to look at it holistically.
You didn't marry for love?
I'm married for love.
Tell the truth.
Of course, I'm married for love, but love comes and goes.
Yeah.
And of course, I mean, but you got to, because if you aren't compatible in other ways, like if your financial strategies are totally different, my wife will never leave her corporate job. It's part of what she does. From a risk perspective, that grounds her. So she's not an entrepreneur like me. In that sense, I don't know if I'm an entrepreneur either, but
you had your first business at 19. You were delivering papers. You're an entrepreneur.
But we're a bit of yin yang. We fit each other.
Yeah.
We are quite different. I'm the broad thinker. I take action. I move forward and then think about it afterwards. Sometimes I'm the broad thinker. She's the analytical. So she'll say, but have you thought about this? And she'll absolutely frustrate me. But I've learned that I need to give that space because she's seeing things that I'm not seeing.
Right.
And I'm seeing things that she's not seeing either. So, and she also appreciates that. So we kind of find each other, and sometimes we probably bang heads. We know we need to go away for a bit and then come back together because we know that together we can do a lot more than if we if we get through that, we can do a lot more than if we try to do it ourselves.
That's amazing. How long have you been married now?
20 years next year.
20 years?
Yeah. 19 years. 19 years in December, yeah.
Wow, that's amazing.
Yeah. No.
And then what has your quality of life been compared to when you were in corporate to now that your time is freed up? You can fly to Cape Town, come do podcasts, fly back to Joburg.
So it's definitely not. So I was talking about that route, and with my coach, we had all this mapped out.
Yeah.
The day after I left corporate, that evaporated. I realized that yes, there was a plan, but when reality sets, it's quite different to the night before when I still had a job. So just a mindset, having to solve. But what I learned is that going through that process with him, I just had to figure it out. It wasn't impossible. We just had to figure it out, whatever that was. I left corporate with a list of ideas of other businesses I was going to build and all the rest. And I followed about 3 months afterwards when I realized that You don't build a 100 million rand business in 6 months. It takes years. But I come out of corporate with building businesses like that is how I used to think.
Right.
I started thinking about, where do I make 1 rand? That became my obsession. How do I make 1 rand? Because if I can make 1 rand, I can make 2. If I can make 2, I can make 3, and so on. I just think, I dumb it down. How do I make 1 rand? And I started just looking around me. And then the second question is, what's available to me almost immediately that I can make 1 rand on? I had to really dumb it down. And that's how I got into Airbnb, is that I looked at my property. I had properties that were long-term rentals. And I had people around me who were in Airbnb. So I was in the network. I had a mastermind.
Network, yeah.
And I thought, okay, let's go. They're doing well, or they are managing. They are positive. Let me go and do that. And I didn't leave corporate to go do Airbnb. I did it almost out of necessity, but with the right people around me, with almost professional training, I went and invested in a course, and not a cheap course either. But I went and invested in it. I went and invested in putting people around me that knew what they were doing, and the rest is history. And I had a few, and I was lucky enough to find some opportunities along the way, and we kind of grew pretty quickly. And now we're sitting at 19. 2 years ago, we got 19 apartments.
Nice.
Between Cape Town and Joburg. And now understanding the dynamics, not just of a short-term rental business, but the dynamics of having almost a national business.
Of course.
Managing teams from afar, etc. So bringing those elements has been quite interesting, exciting, and there's no limit. When I was back at the office, back at ABSA, the conversation I had with my senior manager at the time was, I'm managing the 70 billion rand book. I have moved a few things that we are earning millions more off this book because I've just adjusted a few things. What portion do I get of that? And she said, your salary.
You wanted a portion of 70 billion.
I want, where's my bonus, or where's my equity, or where's my shares? Because was making, the bank was benefiting exponentially because of what I was doing.
Your skills.
And I wasn't at the level where shares were available, even though I was working at that level, acting at that level. And whereas where I am today, there's no limit. There's no limit. Not just in terms of, can I get more Airbnbs, but how do I think about those Airbnbs? What are the sideline businesses that come out of that?
I mean, what are the other businesses within the property industry? Like what you did with Reside, that was incredible.
Absolutely, and all of a
Are
sudden,
you a shareholder there at Reside?
No, that was a passion project that the Investor Con.
Yes.
I love the idea of bringing great minds to come and share their ideas and their experience with investors to build their portfolios. That's actually what drove it. It actually wasn't really as much a business project, a commercial project, as it was a passion project. So and we got a lot of great feedback from that. But also, it was also a way for me to work with my network. The presenters who came and presented at Reside Investor Con, it was also an opportunity for them to have a formal platform and a platform at Sandton Convention Center and talk about themselves. So it really turned out to be more of a passion project and a give back project than a commercial.
Yeah.
The magic is when you can bring the two together. When you can do good things and make good money.
Social impact coupled with profit.
Everyone wins.
Yeah.
Yeah, that is something I would strive for, is actually to find, how do we work together so that we both win better. if you are building a business, whether it's property, books, other services, the one thing that you're going to have with you for the rest of your life is accounting, tax, how trusts work, how companies work, all those things. Now, part of the answer to the question was, you should speak to your accountant, speak to your tax advisors, depends on your personal situation. And that is the right answer. But I'm a firm believer of go and understand how tax works. Go and understand how tax, income you earn in your own right versus a PTY versus a trust. How does tax differ? What are the benefits here? There's so much out there, and maybe it starts with speaking to an accountant or friends who are in that space, because I firmly believe in going to my accountant and telling him what I think I want, how I think I want to do it. Because you know what? I've thought hard about how I'm most tax efficient and how I make more profit, because it's in my interest. Their interest is to just do a tax return, really. So rather go there with outlandish, crazy ideas of how to structure your tax and let them fix it. But now they understand that they've got to get it right, and you've enabled yourself to ask better questions and to have a more informed conversation. So definitely, if you're going down this road, understand tax. If you can do a short course in tax or accounting, do it. Even if you just get half the value or half the understanding of it, it will just set you in such good stead for the future and for your future projects. We worry about what's happening today and the question I have today, but get the benefit that it benefits you for the next 20, 30, 40 years.
And perhaps what you can also do, you want to set up a structure where you pay less tax. Now you've got already your company that you're running. You've got yourself as an individual. Set up a property management company, because that's what you're doing. You're in the property space now. Sublet or rent out. Do a lease agreement between yourself and the company. It's legal. The company is an independent person. It's a juristic person. You are a natural person. Rent out that property to the company for the exact same amount that your costs in terms of the bond is. That lease agreement is very valid. You sign it this side as the landlord, director of the company. You sign it this side as a landlord. This side you sign it as a tenant, as the director of the company. Then the company can operate and collect your rentals, do everything that it needs to do in terms of maintaining the property. Tax will be done at a company level. With you, your profit will be zero. The company will pay you exactly what you need to pay the bank in terms of the lease agreement. Do you follow? I just gave you a hack there, and it's very legal. Is it illegal?
Yeah.
Don't be like the Standard Bank guy now. Like, no, that's illegal. So you can do exactly that, to put yourself in a position where you don't have to deal with all that. Remember, tax you pay when you make profit, or when you sell the asset or dispose of it. Then you've got capital gains, you must pay tax, right? But for as long as you've got the asset, it can grow from 0 to 250 billion or even to 1 trillion. As long as you're not selling it, but you can refinance, and you don't pay tax on refinancing. Yeah,
because it's a loan.
It's a loan.
The bank's lending you money, so it's not income.
It's not income.
You can use it for what you want to, but it's a loan.
So no tax. So you can continue to refinance the thing over and over and over and over. Guys, it's South African laws that are available for everyone to use. You see, Miguel now can go refinance his portfolio, take out 20 million. You won't buy a Porsche.
Oh, no.
But you can afford a Porsche. But the difference is, don't be modest. But the difference is you want to grow the portfolio.
You know, when you start thinking long-term about money and financing and this kind of thing, your my views of money are very different to what they were some time back.
Yeah.
If I had 2 million rand available to me today, using that 2 million will not be used towards going on an overseas holiday. It would be like, how can I leverage this to build a portfolio?
True.
You almost sometimes have to kind of force myself to say, hang on, let's spend this money. You start to become very intentional about how you use your working capital.
Do you wish you learned the lesson earlier?
Cheapers, yeah, absolutely.
Yeah.
Absolutely. I don't regret much because I was thinking about this early on. Honestly, if I can, when people say invest in your education, like invest in your education, a couple of books that really shifted my thinking.
Yeah. Give them to us as we're closing.
One was, I mentioned Rich Dad, Poor Dad.
Yeah.
The Richest Man in Babylon.
Lean purse, fat purse.
And yes. And The Millionaire Next Door. There's a book called The Millionaire Next Door.
No idea.
And that book, The Millionaire Next Door, it's out of a statistical study of millionaires in America and the generation that comes afterwards, and how the generation spends the money. Well, those first millionaires work hard. They build companies, properties, etc., and then their children come and spend the money, kind of thing, right? So it was a survey around that, and it was just all about how you think about it.
Yeah.
And there are a bunch of other books as well, but invest in that. There's something about reading a book and making notes and underlining that you don't get from 5-minute YouTube videos. And there's something about sitting in a quiet and reading, and your mind's processing what you're reading, that has a really great return. But really, invest in education, and it's not just about courses or conferences, but also reading and then applying. And if you don't know something like tax, go and find. I promise, if you understand tax, you can really ask better questions. That will be worth 100,000 rand a year if you understand how to leverage tax in its most basic way. Because when someone up on stage is talking about how to leverage tax, you're not hearing it for the first time, and actually the value is actually going over your head. You actually appreciate. You might not understand it, but you're appreciating it, and you know how to go and ask better questions to actually make it better for you. I met a property entrepreneur. I had breakfast with them 3 weeks ago, and over the last 6-8 years, he's built a portfolio of 300 million rand with residential properties. And he's done it using Section 13(6), understanding how to use VAT, and then the benefits, the tax benefits of finance. But the combination of those have self-funded the cash requirements of building a 300 million rand property portfolio. It was like 7 or 8 years. It was ridiculous. I was amazed.
Beautiful. Any last words? Well, of course, I don't want you to stop. I want you to continue talking.
No, 100%.
I mean,
look, I think don't, keep asking questions, keep speaking to people. If you're going down this road, find your people, find other people who are thinking property investment, who are taking action. Set up the thing I've done in the last 3 or 4 years. Set up breakfast, lunches, or dinners, and say the 5 of us are going to get together. It's going to be a great social, but witness, how are you doing? What's happening on your side? How are you winning, and what's getting in your way?
and golf. Don't forget golf.
Golf,
I'm beating you next round.
and I do this. I did this last night. Myself and Dean got together.
Yeah.
And for 3 hours, we spoke property. We spoke property for 3 hours because we are both interested in it, and it's part of what we do. And it was, we learned from each other last night.
Yeah.
You know, I wish there were 2 or 3 other people there, because now you start cross-pollinating and people start asking the good questions. So find your people, make property investment, part of your life, and you almost get pulled along. You don't have to find your internal motivation, because people around you are pulling you along.
Awesome. My brother, thank you for being part of my community.
Thank you.
Thank you for being a phone call away. And thank you for coming out to add value to the It's More Than Just Money community. I appreciate you. If I haven't told you before, I appreciate you. I'll tell you now.
Thank you.
And thank you so much for being you.
It was a privilege to be able to talk to you. I learned talking today. One or 2 nuggets I take away, and it's a privilege to be able to share knowledge as well.
Awesome. If you're watching online and you're not inspired, I don't know what's going to inspire you. Please, I said to you, comment. Let us know which part of the conversation resonates with you. Let us know where you're watching from, and continue to share these videos. Share this content with people so that more lives can be changed and more people can be inspired. From myself and my team broadcasting from Cape Town, South Africa, Sea Point, Protea Hotel. It's More Than Just Money. See you in the next episode. Ciao, ciao.